Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Hello, my name is Aaron Edwards, Santos Springs. Today is June 30th, 2025. Quarterly stocks reports came out, Acreage report, and markets are closed this Friday for the 4th of July. So a lot going on, a lot to cover. Let's jump right into it. As always, we want to start with recommendations. And here we go. So the recommendation for this week is just to get caught up on sales. I'm mainly thinking about soybean work, or it was really tough. We got a little rally, recommended sales, and then recommended sales and the markets just collapsed. So I'm guessing that maybe it was hard to pull the trigger on some sales last week. Markets have bounced back a little bit. And if that's the case, the only recommendation would be to maybe play catch up on some of those previous sales. So just go over your plans, and if you have a little bit more work to get done, that's what I would focus on. No new recommendations this week. A couple of talking points that I wanted to go over before we kind of get into the analysis section of this. The first one is the report. Today's report. So it's June Acreage report and quarterly stocks. Real big picture, there was an increase to quarterly stocks above market expectations. The good news was on acreage. So markets were expecting an increase in acreage to corn and beans, and actually there was a reduction in acres for both corn and beans. Not only was the acreage number smaller than the March report, since markets were expecting an increase, they were smaller than the market expectation as well. So that's good news for new crop. One way to think about it is that it was bearish for old crop because our quarterly stock numbers were a little bigger, but it was bullish for new crop because of the reduced acreage. So that's the gist of the report. Again, the report came out, markets closed Friday. We basically have Tuesday, Wednesday, and Thursday to digest these markets. And then that brings me to the next point, which is Goldilocks rain. From the outside looking in, or looking at the Corn Belt from a big picture, basically ever since planting started, at or above pace on planting. And if you would look basically every single week, if you look at a 7-day forecast, essentially all production areas got adequate rain. So from just looking at a map, I'm sure that there's issues region by region, and I'm sure there's concerns, but looking at it from the way that kind of Chicago looks at it, so to speak, it looks like there's just Goldilocks rain, where it's kind of, okay, every week we get another forecasted rain, and then the showers come, and then again, there's more forecasted rain and more showers. So that becomes very tough to get a rally in the markets. The third thing is I saw a lot of headlines go around and had some comments or questions on $3 corn in Brazil, and I just think it's worth shedding some light. So number one, you all know that corn is bulky and it's expensive to store. You back that you push that cost of storage back really far inland into Brazil, and a lot of the value of corn really stays in the cost it takes to get that to port. So yeah, right at harvest. Another point is there's still quite a few soybeans left. So there's just kind of this, we weren't even halfway into corn harvest and there was already a bunch of piles of corn outside. Well, why? Well, in large part because there are still beans, because there's so many beans around, right? So personally, this $3 corn in Brazil, I think that you have to take it with a little bit of a grain of salt. And what I mean by that is the cheap current price is as much a factor of the logistics of there's being too much corn right now as it is just overall global supply and demand. So I think there's a tale of two markets, so to speak, or a tale of two narratives. On the one hand, we have a lot of corn in the U.S. with Goldilocks rain and $3 corn in Brazil, and this big feeling that markets are going to get destroyed. On the other hand, we had $5 corn in February, and Brazil's price of corn was super high. And part of the reason there's selling pressure here, and I know this from some customers, is because they made like equivalent of about $1 a bushel on hedges. So yeah, if you have an extra $1, I'll sell you some cheap corn just to get rid of it at harvest. Last year, what happened in Brazil was once we got past that harvest pressure, the corn market just took off. Because here's the thing, Brazil can export corn and compete with the US, but there is growing demand for corn in Brazil. Ethanol for corn going up fast. Feed for corn is increasing fast because as you expand acreage in Brazil, you're taking away pasture land. And what does the livestock do? Well, the trend there is, okay, they less low efficiency grazing, more soybean, more double crop corn, but you feed a lot of that corn right back to the cattle that you just took off the land, right? So it's just a more efficient way of doing of raising livestock and of using land, but there is quite a bit of new demand. What happened last year, and I work with people who sell feed down there, their concern is, can I buy enough? Do I have enough cash to buy all the corn that I need to buy at harvest? Because I'm afraid that I'm going to be competing with really expensive corn when the end of the year rolls around and I'm coming into the middle of the bulk of my business is right around the corner, and I'm afraid I'm not going to have enough corn. So there's not really, in my opinion, there's not a demand problem for Brazilian corn. There's just a lot of corn right now. The big narrative there, and what I think is worth watching, isn't, oh my, $3 corn, maybe our US corn is going to $3 because, okay, will old crop corn in the US be more competitive on the global market than this new crop safrinha corn that's hitting the market? So these exports in July and August and maybe the first part of September, basically like the next 10 weeks of exports, who gets the business? Real cheap corn coming out of Brazil or old crop corn in the US? And that number is big enough to where it could give us a different demand scenario when we step into the fall. If US gets that export business, maybe it doesn't change global supply, but man, that really took a chunk out of US corn. All of a sudden we get stronger bids, and all of a sudden we don't feel like we have corn running out our ears here in the US. But if Brazil takes that, then there might be this big rally in Brazil, but we might not quite feel it in the US. So just exports is something to watch, but I just wanted to make a quick comment of that. And now let's jump to the analysis part. I'll go over the pyramid. Let me get a marker here real quick. We'll get a red one. There we go, red. So, our market plan portfolio, we want to make sure that we're on the same page. We know your risk. And then the next thing we do is the analysis, seasonals, funds, and technicals. And finally, that's kind of what takes us to our action plan. We've already gone over the action plan, but that's our big picture philosophy. Let me back out of that, scroll over. So now we're gonna look at the funds. We're gonna start with the corn. Let's get this stylus and do that in green. Corn, speculators are sold and they have a big sold position. The bears would say they're not done selling. We could really get this market pressured down. The bulls would say, hey, listen, unless they keep selling this too hard, it's already overdone, it's oversold, this market's gonna turn around. So seasonally, I think it'll be hard for us to get a sustained rally in corn. I think if we do get some a little bit of recovery, I think it'll be sold. So I would love it if we've kind of put in the low and now we're gonna chop sideways. I think we'll be hard pressed for a rally unless something really bizarre happens to demand or geopolitics or weather, unless there's some headline that comes in out of left field. I think sideways is good news. If we can stop falling, that's good news. If we can get speculators to stop selling. And then eventually, I do think we'll have a rally. We didn't really get that spring rally this year. So what happens a lot of years, 2020 was emblematic of this, but if you don't get that spring rally, what happens is you typically carry large inventories into the fall, and then farmers didn't get their forward pricing sold, and then you're sitting either late summer or early fall or mid-fall, and farmers don't really have a good option but to dump their grain at low prices and then say, let me go buy something, let me go buy some of this back on paper, or figure out some mechanism to keep upside in the market. What happened in 2020 was basically an August rally that led us to bull markets. Now, I'm not saying that happens again, but we saw a winter rally last year. So I'm not long-term bearish, there is no hope. It's just gonna be hard, I think, seasonally over the next 8 to 10 weeks for us to have too much good news. And let's go look. I wanted to look at two corn charts. So the first one is just a continuation. This is just the price of corn at the nearby contract, but it gives us an idea on perspective. Let me see if I can get a black marker here. And if you look at the nearby contracts, we haven't taken out last year's harvest lows. What happened basically all, June and July last year was just this big old sell-off. And so far in June, that's basically what we saw, this big old sell-off. So last year, if we were just to take the comparison, it still bled out and the actual low came in late August. So we would still see something bad like this, and then eventually it turned around. I would love it if we can get this market already recovering and say, okay, this is the bottom, maybe it goes up and down, and then we get a rally. I wouldn't hold my breath for that. I think that we're in kind of scary territory, so to speak. If there's any good news, it's that we're already seeing stronger basis here. So if this keeps trading down, my hunch is we'll see strong basis. So any old crop you have, you might have a shot at, getting out of that with a stronger basis. And then you got to keep the board of trade, the futures price long to make that basis worth anything. But that's that. And then I did want to look at the December corn just because smaller acreage, not super exciting, right? Even with the smaller acreage, we're still at very low prices. Still at very low prices. Can this recover? Yes, I hope it does. That would be great, but it's just not. Are we going to get a runaway rally? I would be surprised. Another way to think about that is we have the 20-day moving average pressuring us down, and then we have the 200-day moving average. We would need to get something friendly enough to get over this and over that and then turn a corner. Technically speaking, seasonally speaking, from just the sheer numbers of more old crop than expected, I just think rallies will be met with selling pressure on top of this. And I think we're going to be hard pressed. I'd love to be wrong on this one. I think we're going to be hard pressed to get a corn rally in the next few weeks. But let's keep an eye on it. Obviously, if, war or weather changes or, we get some catastrophe, that could change. But with what we know today. Now let's take a look at beans. We pull up the marker here. All right, let's go with yellow here. So the funds are still long soybeans. The bears would say this is really dangerous because they could go from long to short and we could really get a massive sell-off in the soybean market. And that is true. We could, a lot of times seasonally we do. That being said, we just got reduced acreage and we still need rain a few more weeks. So can we keep soybeans at least sideways? Will we get that big old sell-off on soybeans? Or do you think corn has already come down and it's just going to be this sideways boring trade for a few weeks until maybe we get a little rally on the, once we kind of get past whatever the harvest low is, and maybe it comes a little early, August or September. But once we get past that, do we have to have the big old sell-off in beans that many springs we do? Maybe not. Maybe we do. But I would keep an eye on the funds. They're not jumping ship on their positions just yet. Now, again, this is the nearby continuation chart on beans. And what I wanted to point out here, which I think this is really interesting on the soybeans, is even maybe more than the position of the funds. But if we look here at the lower side, the low that was made, was that July or first part of August? Let me pull this out here. Okay, right, kind of first part of August, those lows, which were challenged in December but basically held, compared to the September rally, right? We rallied up in late September. I'm gonna pull that across, there we go. You can really clearly see how we're in a trading range in soybeans, and our current price trading is just right in the middle of that. So I guess that's kind of the point I was trying to make. Ranges can be traded. And if beans are going to go basically between, say, 960 and 1060, if that's the new range, well, as long as those ranges hold, it's not that hard to to deal with the bean market, right? You get up around 1050, that's a sell. You get around 960, 970, that's a buy. And it's just kind of that boring market where it rallies up enough to get some sales and then it falls down enough to get some purchases and you just go. So I'm not sure I would gung-ho say this is absolutely a consolidated range. There's nothing going to change, but I do think that's an important mental image. Basically anything over about 1050 so far has been kind of a good opportunity for the last year. And anything too much below $10 or $9.80 has really been basically a buy. And if we can make it through this upcoming harvest north of $9.50 or $9.60, and if we don't punch through the upper, if the next 2-3 trading sessions or July or whatever doesn't make a liar out of me and just go up to 11 or 11.50. Maybe we're at a point where this is just, there's plenty of beans in the world, but this is a, trade up, trade down. We know this is about what's going to happen. And in range trade, that's a very manageable way to deal with markets, right? At the lower end of that, you sell cash or, sell cash or do basis contracts. Basically, you want to lock in your basis. At the upper end of that range, you want to basically lock in your futures or sell cash grain if you're happy with the price, and you just go back and forth and you navigate it that way. It's not too unlike basically, what was it, 2014, 15 through about 2019 was basically, you get a rally here or there, but a lot of that time was just range bound trade. And it's boring, but it's manageable. So that's one thing to keep our eyes on. To what extent is that range going to hold? And then again, reduced beans. And here there's two, from a technical standpoint, there's two really interesting things. And I'd love to have a crystal ball to tell you which one's right, but I'll tell you what the bears are preaching, and then I'll tell you what the bulls are defending. So the bears are looking at today's session, basically, or Monday, this candle right here, and they're saying we tested resistance and failed. This is going to come down and it's going to pressure markets down. The bulls are looking at last Friday's session and saying we got a key reversal, which is this one right here, which in the same trading session, you take out the low, you take out the high, and you close high. We got a key reversal coming into a report. We made it through the report. That held. We haven't even taken out the low. We just, this market's going to rally and we're going to go back. And then the first, once we get over that, we're going to be looking at 1070. And if we punch through that, we're looking at beyond. So, it's just, technically speaking, there's a really strong case to be made for both. Seasonally speaking, you still have all the upside potential in July and August of the bean market. Sometimes the highest prices of the year come during that time, but you do have, historically speaking, quite a bit of downside risk. So your average July and August prices would go down, but it's not because you can't get rallies. It's because you also increase downside risk. So this market, the direction of the soybean market this upcoming week is, and I wish I could, just puff up my chest and say I know where beans are going, but this is about as perfect scenario as you can have of a coin toss, whether we're going to get an uptrend in a rally or a sell-off, because seasonally, it's what I just said. Technically, it's showing both signs. From a range standpoint, we are right in the middle of the pricing range. We could trade down to the lower end or to the higher end. We're right around the 200-day moving average. I mean, it's if you put all the bullish and bearish factors on a scale, they're about perfectly even, perfectly balanced out one way or another. So again, it's an opportunity to play catch up if you're feeling behind on some of your pricing work, but I'm not going to stick my neck out and make a new recommendation. I think we've stuck out, we've made our moves, so let's just make sure, we've played our hand on the bean market and go from there. So without further ado, let's go to the summary and wrap this up. It's June 30th. It's the last day of the sell season, but it is seasonally a sell. Soybeans are also June 30th, the last day of the selling season, but it is seasonally a sell. The managed money in the corn market, they have sold enough. They are pressured enough to justify buying. So that would be a buy because they've sold it down so hard that it would be worth buying. That's on the corn. On the beans, it's neutral. They're long, but not long enough to justify selling. Beans are in a downtrend. Corn is in a downtrend and beans are in a downtrend. Basis is a mixed bag. Some areas are trading above historic averages, but much of the Western Corn Belt is still below historic average price levels, especially on corn. The corn market appears to be turning a corner and has not traded lower but mounting a sustained rally is an uphill battle technically at this moment. In the soybean market, both bulls and bears can make strong technical cases. In my opinion, the soybean market is a coin toss as to whether it will move higher or lower over the next few weeks. It would always be nice to have a crystal ball. This week it would be really nice to have a crystal ball, but we don't. And so again, let's make sure we get our soybean work done. Markets closed on July 4th. I hope you have a great holiday, and hope the crops are going well. From what the weather shows, it looks like the crops would be doing well. If they're not, or even if they are, I'd love to hear reports and pictures from you. So don't hesitate to reach out. Have a good rest of your week.